Hello everyone, so today's Friday and let's do another wrap up as we normally do on the weekend. So as you know, this week, this is where we were at. Let's check them out. Just bear with me, here we are, okay. So 6th to the 10th of April, let's make this a little tighter. And we had the trade or swing days for all of the assets here: gold, euro, dollar, Bitcoin, SP 500, Dow Jones, Nasdaq. Gold Monday and Wednesday, euro, dollar Monday and Thursday or Friday, Bitcoin Monday, Thursday, SP 500 Monday, Friday, Dow Jones Monday, Friday, Nasdaq Monday, Friday. And I've also added recently, as you know, the vector days. Right? Oops, excuse me. I've added the vector days, and the vector days are the days when we can have extra strength and push in the market. And if it's a red day, it's normally weak to the downside. And if it's like a green day or a blue day, I say sometimes, it's like up to the tops. So if we have a routine week, we're just going to follow the routine, whatever the technical analysis flow is. We're just going to go with that, nice and easy. The good thing with the vector days is if those days have got special drive and push, we'll be able to make use of the volatility. And the beautiful thing is we know about it in advance, obviously, right? The whole idea with Global Trader Club is to know when things are going to happen way, way, way in advance. So, and these are the intraday timing windows. Remember, it's UTC plus 3. That's Monday. Feel free to take a screenshot so you can compare to whatever you're trading. Monday, Tuesday, Wednesday, Thursday, and Friday. All right. So, and as you know, if you're in the members club, I posted all of that on the 2nd of April, and the full month of April, all the way into the 1st of May, is already in the members area. And we are on the new website, as you know. If you don't know now, you should know, because we are now migrating from globaltrader.club to globaltraderclub.com. All right, so take a look here, and you know, you'll see everything the same. And this is the members area for that. Okay, here we are, and it's all the same. All right, so we've got the weekly market intelligence, which is always going to be the current week. Okay, this is the current week. Then you got the forward projections, so you can see we've got all of them. And then we've got the archive as well. So it's really straightforward, and it also has everything. So this is, as you can see here, let's make this, these are the trading days, okay? And then I've got here, if I make this a little bigger, you'll see they're normally next to each other, right? So these are the vector days, and these are the trade or swing days for them. And same thing, as you can see here, trading hours: Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so let's take a look at what happened one by one. Okay, so we had gold Monday, Wednesday. So let's first go into gold. I've been working on the website, the new website. I've done everything myself on it, so it took a bit of time, but at the end of the day, we got there. So we're all done, and it should be, hopefully, fingers crossed, working just fine. So here we have Monday and Wednesday. Now remember, on Monday I said I'd like to go up. Why? Because the market did an impulse. There's a pullback, nice closure on Friday, and Monday, any time from the lows is a good day to go long, and we want to follow it up into that 4,950 zone. Okay, that's the target. So if the market pulls back, we can go long. So let's take a look at the trading days on Monday and see how things panned out. Now remember, all of the vertical lines here, the trading days. All right, so all you have to do, if we have a trading day and the markets come down, we're looking for a U-turn, so we want to buy to the upside, and we want to do it in the day at a trading hour when the price is low. Okay, so This is, as you can see here, let's do this. Let me just put up my epic pen here. Now, as you can see, the market opened, and it opened up a little volatile, and I talked about that, right? So if you made note of it, okay, so take a look at the notes that I do make when I write things down. Okay, let's get rid of this. For example, for Monday, I said volatile opening. All right, so volatile opening. So once you understand that we might have a volatile opening, it could be like a gap. Okay, it could be something unusual. It's just not, not steady. And look at that gold. Immediately big push. It's just selling off at the opening, closing the gap. You see, this is why technical analysis is important. What do we do at Global Trader Club? What we do is we match technical analysis pricing with time. So you got double the chance of whatever you are trading. So the market comes down, closes gap, beautiful. It's a trading hour, closes the gap on a small time frame, starts going to the upside until the next trade hour. And these are important to note, as you can see, right? So from one trading hour here, we're going to another one here, all right? And then here's another one. You see how this is working out? Bang, 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 right? And then we've got the other trading hours, and here's the other one. Okay, now remember, we want to buy low. Our bias is to the upside. So what you'd like to do, if you're going to do intraday scalping, you can obviously sell where they sold off before. Not a problem. It's a trading day because you can scalp the market. Why scalping? Because our bias is to the upside. So I want to buy low to go up. And then this is Tuesday. Now look at Tuesday. That's Monday. Okay, Monday, I said it's a trading day. So market makes a low here. Look, this is the low. All right, nice and easy. And Tuesday, here we are on a Tuesday. Market comes down to the same place it took off from at a trading hour, and the market just goes up. Okay, it comes back, retests, but does not go lower than Monday. So let's get rid of all that, put ourselves into a better perspective. Let's go on to the rest of Tuesday. Let's take a look. So this is Tuesday. Look what's happening here. Again, market comes down into trading hours. Look, it's the same place. Okay, they've come back down to the same place here, this line here, this vertical line. So once they have, look when all of that is happening. It's happening at trading hours. Trading hour, trading hour, trading hour, right? And then, remember what I said, this is Tuesday. So all you have to do is just follow the hours, okay? I said market needs to come to a price by 9:45. And change might happen later in Asia. That's your 9:45, ladies and gentlemen. And the market just boom into Wednesday. Asia 3:15. Change in direction, expect later in Asia at 3:15. Who gives you that information? 1 week in advance. Look, a price by 9:45, change in direction, expect later in Asia. So if you traded the New York session, you want to keep an eye on that 3:15. And as we get there, look at Wednesday. And why is that important? Because we said Wednesday is also a trade day. So market makes a high and then starts sizzling down. Coming into Thursday, now watch the daily videos I post on Vimeo. I've made them available so you can check them out. They're normally just for the members, but at the end of the week, I make it available to everyone so people can see. We're pretty open with everything. And yesterday as well, I said, guys, this is not a bad spot. Okay, let's make that a bit yellowy. All right, so I said this is not a bad spot at all. As you can see from here, the market picked up and we wanted to go up because that was our bias, remember? Okay, so what's happening now here on Thursday is really great for technical analysis. If you've taken technical analysis from me, you would have been on top of that game because you understand, I understand, that's a 37.5 at a trade hour. And we're breaking out again at a trade hour. Coming back to retest the breakout at a trade hour? Come on. This is nuts. Exactly. It's crazy. And here we are. Market taking off. So even if you were trading the New York session, you felt a little late in the move. If you took technical analysis with me, you would be on top of your game because you can always, with price and time together, kind of like adjust yourself to get back into the game. All right. And then look at that. That's a target. What did I say for Thursday? Let's take a look at the Thursday comments. All right. Whoopsie daisies. Let's come here. So let's go to our website and see what I said for Thursday. I said, look, 445, 520. The market should then rise. The market should then first get to 830. All right. If direction is clear, it's likely to keep going. So sorry about the spelling mistake here. Okay. And that's your 830. From 830, look where it's gone to. That trade closing hour. Now, why is this important? If the market goes up into 830, I can take profit. I can manage the trade because I already know things can go pear-shaped. Okay. Or if I said it could go further into the closing, I can just say I'm going to move the stop loss up. If it keeps pushing, okay, we'll just go with it. Okay. That way, because you know the hour, your stop loss doesn't need to be below that swing. Because you know the trading hour, your stop loss needs to be close by. It doesn't have to be like, oh, I'm going to put it under the last swing, because you're just going to get stopped out. So you're either going to take profit, and if you entered here, look at the profit you're taking. Look, this is really important to understand why time and price is the best edge on the planet. Let's get rid of that. Look, when you're entering a trade with time and price, more often than not, once you entered a trade here, right, your stop loss is going to be just under the low here. All right. So let's say you entered here on the next bar there, right? This compared to that, okay? You have like 1 to 4 risk return intraday trading. Okay, it's pretty good. All right. So it's more often than not just a 1 bar stop loss, because if the timing is wrong and the price is wrong, you don't want to be there anyway. So your stop loss is very tight. All right, so let's move forward. Now that you got the hours, you can put the hours on anything you're trading. I'm just going to demonstrate what happened to the things that I look at for the members area, which is gold, euro, dollar, the US indices, Nasdaq, SP 500 and Dow Jones, plus Bitcoin. So let's take a look at euro dollar as well to see how that panned out. Now the trading days for the euro dollar was Monday and Thursday or Friday. If I've got slash Thursday slash Friday, we need to be careful on both of those days. So you can wait for Friday to see what happened on Thursday and then follow the move. So you don't have to rush the trade, all right? You don't have to panic about it. So let's take a look. So here we are on a Monday, right? Let's get into Monday, all right? This is your Monday. That's your Monday, all right? So market from Asia session makes an impulse move to the upside. Beautiful, what we like to see on a trade day, swing day. So once the market heads up on Monday, see how it retraces back down into the low on a Tuesday. Now let's see where that's panned out. Once again, that's your high that it did on a Tuesday, right? Let's say it did this one, it doesn't matter because they're pretty close. And this is where the market made the low Monday. Look at where we're at. Again, we're at a 37.5 at a trading hour. If you just do this after an impulse wave, wait for the 37.5 and it's a trading hour, and you enter the trades, you'll still be making money. If that's your only setup, you're still good, all right? Because we've got bias, because we've got the trading day, so we understand we want to go north on this setup anyway. If you take a look at the videos as well, in fact, I said euro dollar is a little tricky because that's the impulse and we're in a pennant, okay? But I also said, guys, because we're doing short-term trading, we're intraday or like a few day swing day traders. We're not big swing traders. We're like intraday or within the week, right? We're taking positions within the week, and within the week can be like a day or 2 days or 3 days, depending on what the swing days are. So once you come in on a Monday, look, I did say 16 is going to be a target. Beautiful. It's closing up there, right on there. So it's obviously bullish. Next thing, trading days is just going to the upside. Okay. Now the beautiful thing about the way we trade things is because we have a future target all the time as well, right? So if you took technical analysis, you understand goodbye kisses and you understand where we need to head up to. So by Thursday, if we haven't gone up there, Friday is still an opportunity to buy and a pullback to push up if it's at a trading hour, all right? So then you already know the entry, the stop, and your target where you're potentially going to go. That means during the week you can actually keep following your trade in that direction because you know the next trade swing days, right? So by Thursday, Friday, we should get to the target. All right, and this is where the market just turned around, blows to the upside, trading day Monday. And the reason I said you can go along with this, I even said keep your volume a little bit lower because we're in the middle of a pennant. If we were down here and it's a trade day, okay, like we are going in, okay, and that's it. But here I did say be careful because we're in the middle, but it is a trade day. The market is down, so on that trade day we're looking to go the other way, and that's how it is. If you just take a look at the hours as well, just like this one, impulse wave 37.5 on Tuesday, comes down, beautiful, right on the price time correlation, and look at that going all the way back up into where it was on Monday and earlier Tuesday session. And then look at this beautiful setup. Once again, let me tell you, this is New York session. Now these are the trading hours in the New York session, all right, until we get into Wednesday. Look, that's Wednesday there. So now let's take a look at let's just do the same setup, right? Market takes off at a trading hour. Up here, you should have taken profit, okay? Be smart. But you also realize from price action, the market closed up here on this 15-minute chart. So it's clearly bullish. Great. What can we do? Let's do the same thing for the intraday. Look at this. Market does an impulse, comes back into 37.5 at a trading hour. Is that a coincidence? That is the third example I just showed in this week, including an intraday one. Same setup. If you just use that after an impulse, pullback, trade hour, 37.5. More often than not, it's 37.5, but you got to check for gaps as well. So if there's a slight gap underneath 37.5, be mindful, right? Don't be just blindly following stuff. And then look at what's going on Wednesday. Market, first of all, going up. And then because we know Thursday is trading day, Friday is a trading day, market just shoots up all the way into Wednesday. Now, what's the first trading hour on Wednesday? Remember that 3:15? I said be careful. This is your 3:15, guys. All right. So at 3 o'clock it made that, and then now we're stagnating. Okay. Beautiful setup again. It's a 3 tap. Okay. Impulse wave, runner, 3 tap, breakdown. Okay. Now it makes a low. It makes a low pretty much at the trade hour. Market starts buying a little bit. This is still Wednesday. Now look at Thursday. Asia buys a little bit. London buys a little bit, taking us to the trading hours. New York does a little pullback at the trading hour. And then bang to the target trading hour. That is precision trading. Okay. And a lot of people say, they've told me too, in my face, to my face. So you can't do this consistently, guys. I am giving you a wrap up every week. I am posting the next month from the month before. How much more posting can I do until you guys understand that this works consistently? Okay, so you have to get out of your mindset and go above reason. There's a guy who told me, oh, you can't predict what the markets are going to do, when they're going to turn, and all that kind of stuff. And I'm like, okay, I'm not going to argue with this guy, because you just can't argue with an idiot. So I like to show people what's going on. Your technical analysis, whatever style you're using, is good. I've just shown you today the most primitive impulse pullback timing trading. Just one setup. You add to this whatever you're doing. I don't know, demand supply, support resistance, order blocks, I don't know, whatever there's out there, ICT, volume trading, I don't know, breakout trading, even your breakouts. Look at what's going on here. Even a breakout. Look, market breaking to the downside, boom, at the trading hour. It's just not going any higher. It's telling you my intention is here, and then all you have to do is box it. If this is your first video on this channel, look for the video where I talked about boxing time, not boxing price, boxing time with price. Okay, so then you can pretty much do all of that stuff. Okay, now as you can see, again, look, let's do this. Where is the breakout coming? Okay, look, let's do a bit of technical analysis while we're at it, so you understand how this can be really helpful for you. If you have time, your trading is just at another level completely. You're prepared. This is the place where the market took off. Okay, now you're going to see every time we do these takeoffs, the market has to come back somewhere, 37.5 nearly. This is where the price moved up. Look, you see the impulse there? This is the place where they just went boom. So you take the place where they went boom, or you take a low and you sit on it and you let the market come to you. It comes to you. Trading hours, you go along with it. Trading hour, look at that. Thursday, trading hour, going up. Coming back again to the trading hour. Beautiful. Going up into the trading hour. Slight pushback. Going in all the way into the 8:30 time target, which is wonderful because you want to take profit there. Why? Because they sold there and they sold heavy. So here you got to take profit and call it a day. But what a day it is. All right. So let's do that. Now, it looks like I'm showing you guys everything after it's happened, but this is a weekly wrap-up video. So go to vimeo.com and check out the videos I do daily for the members area, and then when you put the time and the asset together, it's going to make sense, because What do I show you there? I say, okay, guys, if the price comes here at the right time, that's it. We're like, that's the trade. Let's take a look at Bitcoin. Now, with Bitcoin, remember the trading days, Monday and Thursday. So let's take a look. This is the daily chart, and that's your Monday, that's your Thursday, and that's the target we've been looking at. All right, that's the gap fill. Obviously, I like this 74,500 as well, and if the market pulls back here, buying again to go higher is on the cards, and we should do it. But you don't want to be buying the tops. And if you know that Thursday is a trade day, look what happened. That closed up. We're in Friday. It's done the target and just slides downwards. So on this trade day, obviously you want to be taking profit or pushing your stops to the upside, so you're all covered. But look how beautifully that's working. I also gave Saturday for a trading day in the previous weeks. And you can check the weekly wrap up for that as well. All right, so then all you have to do, guys, look what I said for this. This is a beautiful impulse. Let it come back, fill in the gap, and then let's go. And all week I've been encouraging you to go along with it on the pullbacks. If we take a look at this again, so let's go to Monday. Okay, this is why timing is literally gold. Now let's take a look at this. This is Monday and it's a trading day. Market, I said market might open volatile, right? And that was in the notes. So the market opens up big volatility. So what happens if I miss that? Monday's a trading day. We want to buy. You don't want to buy the highs, right? And as you can see, the market never came back on that day. All you have to do on a trading day, if you're going to go and trade, is wait for the market to come back at those hours. If it's not at those hours, we're not interested. So Monday, the market never comes back. Tuesday, look at your US session. Now let's take a look. Same routine. This is Monday high. This is Friday low. Look where we're at. 37.5 zone. If I take this from Monday's low here, where the market pushed up, that's 25 zone on the line at a trading hour. Okay. And if I take it from the previous week's low, which is going to be there, right, somewhere there, or Friday, you can see we're back down into a zone. So as long as you're in, the market retraced healthy. Anything below the 50 line is a discount after the impulse. It comes to 37.5, 25. It's a trading hour. You are in the game. You can also match these with your gaps. All right, so if there's a gap here like there is there, look, you're expecting the market to come for a fill-in, and it's doing it beautifully, and you know you want to go to the upside. So when everybody's in panic mode because the market is selling, you're thinking to yourself, hey, let's just get in and buy. Why? Because we knew Monday was a trade day in advance. We knew Saturday was a trade day in advance. So the market is bound to chuck a Yui and be pushy. So the market is chucking a Yui. It's pushy. Any pullback to fill in the gap at a trading hour is like, let's go to the moon. So here you going to the moon. Well, close by a moon, but in any case, it's the moon, right? So there we are. And the market just takes off when after the trading hours. Okay, so understanding this is like really important. And look at Thursday. What a beautiful day. After the impulse wave, look what the market's doing. It's going sideways. It's done a top. It's done a low. And it's bouncing around. Now look, market comes to the low again at the trade hour. A beautiful opportunity to scalp. Again, trading hour going up. Comes back down to the same spot. at a trading hour and just takes off, goes to the next trading hour and just sizzles down. Okay, so you understand that following the hours with your pricing is like the safest way to trade, with a tight stop loss and a good vision of where you're going to go, not just in terms of price, but in terms of time. So let's take a look at SP500. Now with SP500, follow my Vimeo videos, check them out because I made them public. Like I said, everybody's going on about, oh, you know, the market's going down. Yeah, I know it's going down. But if you know when to go the other way, if you got pricing, if you got timing, you can follow through. And I did say this week as well, guys, the market should go up, okay? Because this is a big flop. So no gaps. It's really healthy selling, by the way, okay? And this is really unhealthy buying. So when we get up here and we've got trading days, we're going to be looking to sell, obviously, right? And everybody's going to be telling you to buy the dips. If you do, and if you're a long-term position holder, you will get screwed. So don't buy the dips until we're over in April, because this thing should come further down and break this zone. Okay, so let's see. So look, Monday, trading day, right? What do we have for the indices? Monday, Friday. Monday, market breaking to the upside. It's not really a break, but it's closing high. Price action says I'm bullish, okay? It hasn't really broken and closed above it, but it's saying I'm bullish. Now look at Tuesday. The market comes down. They buy, okay? Check the trading hours and you will see what's going on. Right, let's take a look at Tuesday. Look at Tuesday. Trading hours, market comes back. Look where it's coming back to. Monday support. Does the whole thing Tuesday. Comes back to the same freaking spot at a trade hour. I mean, that is just nuts. And then the market's moving to the upside. And then, ta-da! All right, so it's Wednesday, nice and easy. Market going sideways after the impulse wave. Trading hour on Thursday, London. Trading hour Thursday, New York. Trading hour target zone in New York. It's all doing it there. Okay, and today's Friday. It's a trade day. What do I want to do? Well, I don't want to be buying, do I? You're only going to be buying to go up here. Let's get rid of this. So we'll see where we're at, because that's a target, right? So going up here is okay, not a problem, but you've already done the majority of the day. The only time you can buy today is if it comes back down, and you can do like a short-term trade. Again, we come down here, maybe stop sweep it, or down here, okay, which is the opening closing of the previous day. Comes here, and you can do an intraday trade, scalp, get your weekend fun money out of the way and call it a day, and that's it. If it breaks above that, pull back into a trading hour to push into a target, which we knew about ages ago, by the way. Then you can trade it. You see how time and price works. You can get into the trade at the right time and price, and it's going to be less stressful. All right, that's just the beauty of it. So if you know a bit of technical analysis, if you're taking it from me, or it doesn't matter whatever technique you're using, you might be a really good technical analyst, and that's great. All you got to do now is just add your timing in, and this is going to be the way to trade. Same thing with anything. The hours I post here are specific windows during the day where things have a good potential to turn the market or to break the market out. So with the trading days, you've got your bias, you understand where you want to go. The trading hours are going to give you the opportunity. All you have to do is match it to your technical analysis. And like I always say, just have one or two setups and that's it. If it doesn't match your setup, just let it go. But even if this 37.5 setup I showed you, you can see how beautiful that is. All you have to do is just wait for a move and then 37.5 it, and that's it. Or you just look at where they bought before. Oh, they bought before here. This is a trading hour, so let's buy again. The worst case scenario, this will break down and you'll have a really tight stop loss, and you won't feel bad at all because you said I had time and price on my side. Okay, didn't work out. Every once in a while, that's how it's going to happen. But still, the market will more often than not go in our way. So here we are, and that's how it is. Once again, a friendly reminder to everyone, because we are migrating to the new website. Okay, if you are a member in the old website, please get your ass into here as best you can. So, because in WordPress there are a lot of problems, and because I'm not updating the website, some of the some of the apps there, it's not actually me not updating, it's the publishers of the apps that we use on WordPress websites. They're not getting updated, and then it makes them vulnerable. So I've moved the site to a really secure place, and there you won't be having any of these dramas with apps and all this kind of add-ons and so on. So it's going to be much safer for us. So globaltraderclub.com is the new address, and after I think I've said 1st of June in my post, so I've made a post here, so be mindful that we're all going there. All right, 1st of June we're getting out of globaltrader.club and going into globaltraderclub.com. Okay, so please be mindful. Whenever your membership is, you can end it on the the day before the last day, so it doesn't get charged. It gets charged automatically, so I've got nothing to do with it. But this is how it is, and that's the better way to go. I hope you like this wrap up. There are a bunch of videos on how to use time and price. I've also done a bunch of videos on how to fix every problem traders have with time. Using time, just adding the time into any trading method that you're using technically will just save you a lot of pain and grief. Have a great weekend.